What's up, guys? Welcome back to another video. If you are new here, my name is John and this is Talk Finance. I am back with another quick stock review. But before we start, I'm not going to ask you to hit the like button, even though it would be great if you did. Just wanted to thank you for watching the video and the support so far. So thank you. Okay, let's get started. Today, we are talking about MSCI stock, which stands for Morgan Stanley Capital International. Are they a stock worth buying? If anything else, at least a stock you should know about. One of the things I noticed today is that although most of the market is red, this stock managed to not only stay green, but has been steadily rising year over year in pretty much any market. I will also review a few articles released recently that highlight MSCI. Today, MSCI closed at $528.28 a share, and it was up 1%. If we look at their 6-month return, we can see that they are still up 12%. But what about the 1-year mark? I mean, most stocks are still in the red when it comes to the 1-year return, right? Well, they're up 15% from a year ago, 240% from 5 years ago, and since inception, they're up over 2,000%. But who is MSI and what do they do?
You tell me, who is your daddy and what does he do?
MSI is a leading provider of critical decision support tools and services for the global investment community. Keep in mind that MSCI makes its money from licensing the indexes to the financial companies that create the ETF or exchange traded funds that mirror them. On their website, we can also read that they have over 50 years of expertise in research, data, and technology. They enable clients to understand and analyze key drivers of risk and return and confidently build more effective portfolios. Clients use their industry-leading research-enhanced solutions to gain insight into and improve transparency across the investment process. At MSCI, they strive to bring greater clarity to financial markets and use innovation to drive global economies. Relentless innovation is in their DNA. Seeing the impact of those innovations on global economies inspires them to continue building forward. Healthy economies stimulate job creation, encourage infrastructure development, and generate the returns necessary to improve living standards for everyone everywhere. They are an American finance company that's based out of New York City. They are a global provider of equity, fixed income, real estate indexes, multi-asset portfolio analysis tools, ESG, and climate products. It operates the MSCI World, MSCI All Country World Index, MSCI Emerging Markets Indexes. ESG stands for Environmental, Social, and Governance. It's a term used to represent an organization's corporate financial interests that focus mainly on sustainable and ethical impacts. Capital markets use ESG to evaluate organizations and determine future financial performance. Investors Business Daily provided more information on the company in this article titled MSCI Stock Rebounds from Support, Teams Up with Google. The article describes MSCI as a company that provides products and services for investors. Those include indexes used to create and benchmark exchange-traded funds and mutual funds. ETFs tracking MSCI's indexes include some of the largest in the world, such as iShares Core MSCI EAFE, iShares Core MSCI Emerging Markets, and iShares MSCI EAFE. On March 6th, the global indexing and benchmarking giant returned to the IBD long-term leaders list, backed by a strong earnings record and expectations for double-digit growth. Their IBD long-term leaders list is not something I consider when researching a company. That is Investor Business Daily's personal list, and I like to do my own research on these companies, but always consider what other articles are saying and why as well. Mutual funds owning shares in MSCI rose for a third quarter in a row to 2,216 funds in the fourth quarter of 2022, up from 2,098 in the third quarter. Shares of the index provider rose 1.4% to $528.28 on the stock market today, doing better than just holding their ground as a large share of financial and banking stocks headed lower. In the process, shares rebounded from a test of the 50-day moving average and cut back above a down-sloping trend line in the handle of a long, deep base. Under normal circumstances, that would present a buy opportunity for aggressive investors, but the market status is currently in correction, discouraging traders from making new purchases. I will disagree with this part of the article since I know a lot of stocks, especially safety stocks, are moving above their 52-week average or at least above their 52-week lows. Although most of the stock market ended in the red today, Most of my shares ended in the green and are all above their 52-week low, including MSCI. They have a 52-week low of $376 and a 52-week high of $572. The article continues saying that it is better to wait and see whether shares rise to the $572 buy point in the cup with handle base. The handle formed after a 9% earnings surge. The week ended February 3rd. If you are like me and believe the company has a long-term growth outlook, then you wouldn't worry about what price you purchase this company. I buy and hold for long term and hold a lot more dividend stocks than growth stocks, but I believe you should have a combination of both. In this case, I do feel like there might be some more volatility in this stock, and although I do see it growing, it's not one I'm very interested in at the moment. I will say this is a solid company with a lot more potential, since we already know it's a pretty good stock buy. Earnings increased steadily throughout the COVID pandemic, up 15 to 27% over the past 3 years. Growth slowed to around 13% in each of the past 3 quarters. However, Wall Street profit estimates are upbeat given the uncertain and challenging macro outlooks. Analysts call for EPS to grow 12% in 2023 to $12.83 and 16% in 2024 to $14.90. On January 25th, MSCI announced a Google partnership to build an investment data platform in the cloud. Customers include asset managers, banks, corporate centers, insurers, and wealth managers. MSCI use of Google Cloud's artificial intelligence technology will allow those customers to process structured and unstructured data at scale and more quickly than ever before. Sachs also wrote about MSCI, rating it a hold. They said that MSCI is benefiting from solid demand for custom and factor index models, a recurring revenue business model, and the growing adoption of its ESG solution in the investment process. MSCI expanding portfolio of climate tools is expected to drive the top line. It goes on to say that acquisitions have enhanced its ability to provide climate risk assessment to investors with climate requirements. Moreover, strong traction from client segments like wealth management, banks, broker, and dealers is positive. MSCI currently has a market cap of $42 billion, a trailing 12-month PE ratio of 50.55, and a trailing 12-month EPS of 10.45. Their 1-year estimated price target is $562.27. Most analysts are giving MSCI a hold rating, with 3 marking it a buy. Also, I want to mention one of my favorite things, especially when a company has future growth potential. Dividends. That's right, MSCI pays a quarterly dividend yield of 1.04%, which comes out to $1.37 a quarter, which is great since that is on top of their already great share price appreciation. But after all that is said, I'm still not buying this company. I think it will go back down a bit before it continues its share price growth again. And although it managed to stay green while most of the market was red, I think it will eventually match the overall market. But don't get me wrong, this company is going to continue growing. It's just not a buy for me right now. What are your thoughts on MSCI? Do you currently own it in your portfolio? If you enjoyed the video, consider giving the video a thumbs up by hitting the like button. And you might as well subscribe while you're at it. See you on the next one.